Copper just hit the 97th percentile, and copper at this level is a leading indicator of global industrial demand. Something is breaking beneath the surface, and the data confirms it. Right now, the S&P 500 is at 7,353.6, the 96th percentile for the past year. Historically, the S&P at this level has historically marked a regime inflection. Says the data needs to confirm. The commodity analyst says we are in a commodity supercycle driven by underinvestment and deglobalization. In the next few minutes, I will show you who the data says is right and what it means for your money this month. The scoreboard just changed. A scoreboard flip means the numbers shifted. Pay attention to what moved and why. The commodity analyst called it commodity supercycle. Oil at $101.2 confirms it. 151-day streak. Snyder just moved from wrong to right. Snyder is right, and the data keeps proving it. The dollar index at 99.4. The volatility expert just moved from wrong to right. The volatility expert called it volatility expansion. VIX at 17.8 confirms it. Too early to call McElroy right or wrong. The thesis is building but not confirmed. 150-day streak. Hartman is waiting on confirmation. The narrative holds but the data has not validated it yet. 144-day streak. Too early to call the dollar analyst right or wrong. The thesis is building but not confirmed. 3 days running. Gammon just moved from right to early. Gammon might be right, but the data has not confirmed the thesis yet. Score today. 3 right, 4 early, 0 wrong. When a speaker moves on the scoreboard, it means the data changed, not the opinion. That distinction matters. Today's big question, are commodities in a supercycle, or is this the top? On one side says, the data needs to confirm. That is the setup. Everyone hears it on the podcast. It sounds convincing. On the other side, the commodity analyst says, we are in a commodity supercycle driven by underinvestment and deglobalization. Two smart people, opposite conclusions. So who is right? Here's what the data says. Oil at $101.2, 94th percentile, down 6.1% today. Gold at $4,494, 65th percentile, down 0.3% today. Copper at $6.24, 97th percentile, up 1.3% today. Bottom line, the data is split. Neither side has a clear edge, which means the resolution is coming soon. If oil drops below $80, the supercycle calls in trouble. Right now, it is at $101.2. If copper breaks to new highs while oil falls, it is demand rotation, not a supercycle. Oil at $101.2 is in the 94th percentile, reversal territory. If it drops below the 75th, the thesis weakens fast. Gold at $4,494. We'll track it daily on the scoreboard. Phase 1 is the good times, but good times do not last forever. Here is how close we are to the edge. We are 75 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet, but we are watching the pace, not just the level. The trigger, investment grade spread crossing 150 basis points, currently at 75 basis points. Pace is flat or improving, no urgency right now. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has yield curve. Initial jobless claims flashing red. Phase 1 holds with 75 basis points of buffer. Conditions favor risk, but do not get complacent. Wall Street trades the index, we trade the ground. Here is what the ZIP level data is screaming about today. Breathitt, KY, lenders are saying no at scale. In Breathitt, KY, the HMDA denial rate is 74.8% across 167 applications. Top reason, credit history. Credit doors closing is the slowest, surest signal of a turn. Stewart, GA, lenders are saying no at scale. In Stewart, GA, the HMDA denial rate is 73.5% across 68 applications. Top reason, credit history. Credit doors closing is the slowest, surest signal of a turn. SD, days on market, is spiking in Sioux Falls. Days on market in Sioux Falls moved plus 99% in 30 days, now 232 days. Buyer leverage score, 64/100. Days on market is the cleanest leading indicator we have. Big swings mean liquidity is changing fast. These are not hand-picked metros. They are the loudest signals in the housing data right now. chosen by the numbers, not the narrative. Today's debate asked, are commodities in a supercycle, or is this the top? Let me show you what happened the last time we were here. Copper at $6.24 is in the 97th percentile. That means it is higher than 97 out of 100 days in the past year. In 2022, copper dropped 35% on China lockdowns and global recession fears. In 2020, copper crashed in March, then doubled over the next year on stimulus demand. In 2011, copper peaked above 4.60, then gave back 30% as China growth slowed. Different environments, different catalysts. But every time, the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, oil at $101.2 is in the 94th percentile. The last time both copper and oil were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. History does not pick a winner here, but it does say the resolution is coming soon. Be positioned before it arrives. Here's what the data says to do right now. Stay alert on VIX. It is dropping 3.3% today. Fast moves demand attention. Avoid Phoenix at 41% payment burden. That is stretched territory. Phase 1 holds. No alarms, but the runway at 75 basis points is shorter than last month. Every signal is live at analyze.builderslens.com. The talking heads give you opinions. We give you the numbers. Subscribe and I will see you tomorrow morning with a fresh scoreboard.